This is Andrew Stotz of Stotz Investment Research. Today I'm going to talk to you about economic and population basics in charts of 5 select markets in Asia. The first one is India, the second one is Pakistan, the third one is Philippines, the fourth is Thailand, and the fifth is Vietnam. Recently we have an upcoming event for CFA Society Taiwan, and these are the 5 markets we'll be presenting on. So let's look at them. First of all, the majority of countries in Asia have room to grow GDP per capita before their populations age. I've circled or put boxes around the 5 countries that I've mentioned here, and what we can see is that the population is on the right axis, the right-hand scale, and the GDP per capita is on the left. And what I've done is ranked this chart by GDP per capita, with the highest in Asia being Singapore at a little bit over 50,000 US dollars. Now, a few comments that I have. Tiny Singapore and Hong Kong have the highest per capita GDP. China's per capita GDP is impressive given the size of the country, almost 10,000 US dollars. India has opportunity to expand its per capita GDP for decades. A long way to go for India. And Indonesia, Pakistan, and Bangladesh are big countries, but there's room to go on the per capita GDP. If we look at the ranking of the 5 countries, we can see that Thailand has the highest per capita GDP at a little bit over 5,000 US dollars. Philippines is next, then Vietnam, India, and Pakistan. Now, next I'll look at population growth. Again, population is on the right-hand scale, but let's look at where is population growth happening. First, the 2 giants. India is growing fast, going twice as fast as China. Easy for me to say. And what we can also see is above average growth in Afghanistan, Pakistan, and the Philippines. Korea and Thailand have the slowest growth, and Japan is negative. A big struggle that Thailand is facing is extremely tight labor market. The next one is looking at the breakdown between young, the red bar, and labor force, the blue bar, and old, the green bar. And what I can see is that youth will soon drive India, Indonesia, Pakistan, and the Philippines, and the youth has been lost in Thailand due to very, very slow population growth. China has the largest labor force, but India has more young people about to join. Japan has the largest percent of old folks, and in fact has been facing some pretty significant challenges there. Now, relatively rich Korea, Hong Kong, and Singapore all are facing aging populations. Now, less rich Thailand is at risk because they could be getting old before they're getting rich. Now, let's look at the 5 countries that I've been talking about in this presentation. India, Pakistan, and Philippines have an abundance of youth. You can see the population is 1309 for India, for Pakistan it's 189, Philippines 102, Thailand 69, and Vietnam 96. But what you can see is that the labor force is 71% in Thailand, right? And Thailand and Vietnam have the largest share of the population that are in the working age. But those are the ones that are going to move into old age over time. However, India, Pakistan, and Philippines have a large share of young dependents that are going to join. So that's the red bar. They're going to join the workforce in the future. And they should drive the economy and the workforce. Now, if we look at this, we can see that this was 2015. This is the current period. And this is what's been forecast by World Bank population prospects. This is for 2050. So as we flip from present to 2050, what we can see, one of the most pronounced things in 2050 is that green bar for both Thailand and Vietnam. Thailand and Vietnam are getting old but not rich. Unlike Japan, which got rich and then old, moving its per capita GDP to a recent nearly 40,000 US dollars. Thailand only recently hit 6,000 US dollars, while Vietnam is at only US dollars 2,200. So a potential crisis in old age there. Now, let's take a look at the banking industry for these countries to try to understand what's happening with non-performing loans. We can see that India and Pakistan both have 9 to 10%. Now, India has been accelerating pretty dramatically in their non-performing loans, whereas Pakistan actually has gotten to that 10% by falling. But both of them are very high levels. The one thing about India is that much of the bad loans is within the government banks, but I think it looks a little bit dangerous in both of those. Now, the Philippines banking industry is in the best shape at a non-performing loan ratio of 1.7%. Thailand has been accelerating, but still is only at 3%. Now, let's look at the net trade. So we're just looking at trade, not looking at remittances, like that would have a positive impact on Philippines, but just net trade. And what we can see is that Thailand is the only major net exporter. Philippines has recently becoming very dependent on imports and has not matched that with exports or re-exports of imported products. Now, inflation and unemployment are very low in Thailand. If we look at some of the other countries, Thailand has very low. Vietnam is also very low. India has the highest inflation at almost 5%. And Pakistan and Philippines have relatively high unemployment ratios of about 6%. So there you have it for those 5 countries. If you want to get our equity FVMR snapshot for free, well, every week you would receive the updated equity FVMR snapshot. It's a one-page that covers fundamentals, valuation, momentum, and risk, what we call FVMR. After signing up, you'll receive a one-page PDF every Monday. Just go to becomeabetterinvestor.net/FVMR snapshots to download yours today.